Hi and welcome to the Money Effect, where I bring you all news, money, finance, and investment related. Please like and subscribe for continued purposes. This is just a disclaimer. This is just for strictly not financial advice, just for education purposes. Now that's out the way. Let's go. Right, so it's been a while. Let's get back into what's going on in the markets and let's keep this up because interesting times. So the first one we're going to talk about is kind of some money news, and we're going to talk about the Bank of England hiking rates. Now, if you go back to my earlier videos and maybe my first video, I was talking about inflation and how all these so-called clever central bank people, this is the guy that tells everybody we should all now not ask for pay rise because we're increasing inflation. I mean, that's another story. But they were all saying inflation is transitionary, and once the economy gets moving, blah 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 blah. I mean, clearly it's not transitionary. So we're gonna get into. I mean, well, let's get into it now. This is the reason. You can see it right here. Like, I mean, inflation holds at 8.7%. It's not falling. Uh, the highest it was in 1997 was whatever. Um, well, I don't know why. I don't want your stupid spam. That's fine. Cool. So we can see why. So British inflation, it's not going down. And we've discussed about inflation. I said inflation wasn't transitionary. It's something that's going to be with us for a long while. And fundamentally, inflation, especially in the UK, it's more of a supply side issue. We just got limited supplies. If we just look at houses, there's a fundamental shortage of houses, and the problem is for these central banks, these governments, you can bring inflation down in two ways: increasing supply or decreasing demand. If we just look at a house, for example, to build a house, it's not like you can build a house in one day, really. It takes a year or so, planning permission, actually building the house, putting all the nice furniture inside with all these new build houses, blah, 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 blah. So obviously the way they're trying to decrease inflation is decrease demand. I mean, for me, the problem is inflation is more supply issue. Supermarkets, suddenly all their prices are going up. Me personally, I just think it's a load of baloney. They're just trying to hoard and make extra profit. We're already seeing with what happened with these energy companies, with this so-called invasion in Ukraine, which literally supplies about 1% of our energy. And yeah, all these energy prices suddenly went up. But yet the energy prices went so high, but all these companies like British Gas, they started recording record profits. So how does that make sense? If their costs are going up and they're passing it on to you, surely their profits should be the same or worse. But yet they were all getting record profits. Why? Because their costs weren't really going up. They were just using that as an excuse to pass on costs to us. And that's really the real problem. But anyway, interest rates have gone up again. Obviously, anybody out there that's, well, if you're in a, if you're, it's mainly your biggest debt will be your house. So it's for mortgage holders. It does affect credit cards. It will affect people with nice cars. Listen, if you've got a nice car right now, we've been living with 0% interest rate for the last since 2009, I believe. So we had a good run of 10 years. I mean, this is the kind of time where if you've over leveraged yourself, you're going to struggle. People that have multiple houses, multiple mortgages, all these buy-to-let landlords. You buy one house in the UK and it's so easy to just get other houses. Unfortunately, now is the time is kind of payback. So you really just got to look in your budget. Me personally, I don't think inflation's coming down anytime soon. The issue is these interest rates hikes are not going to be felt for another 18 months to 24 months. That's like what, 1 to 2 to 3 years. So they're going to probably stop rising at some point, hopefully this year. But then I believe they'll just be held for a sustainable part, unless obviously the economy falls off a cliff, which in itself will bring inflation down anyway. If it doesn't, then we get into a case of stagflation, which is probably going to be the worst case. That means high inflation and low growth. So well, let's not even get into that talk. But yeah, if you're somebody out there, just be careful. The debt you're taking on. If you've got it's hard for if you've got a house to give people advice. I'm sure there's so much advice out there on what you to do. Obviously, if your term loan is coming to an end, make sure you're speaking to your broker as soon as possible to try and get a better deal. Don't stay on a variable rate. Um, you know, it's up to you whether to lock it in for 2 to 5 years. Obviously, if you lock it in for 5 years, I think interest rates will fall. So 5 years might be too much. So potentially 2 years is kind of a safe bet. In terms of other things, credit cards. If you're taking on credit card debt, look for 0% balance transfers. If you've got a good credit rating, look for 0% balance transfer cards. You can try and move your debt off there, and get 18 months to 2 years of 0%, and then hopefully you can start paying that off, and interest rates will start falling. If you've got expensive cars and things like that, maybe just look to downsize now. Maybe you're going to end up paying the same you are now, but just for a lesser car. Unfortunately, like, that's the way it is. I mean, this guy here is telling everyone not to ask for pay rise. Don't listen to him. If you're in a position where you feel that you're valuable at your work and you can ask for a pay rise, ask for a goddamn pay rise. And if not, and if you feel that there's opportunities out there for you to move to get more money, then do it. Like, don't be listening to these people that are telling you not to ask for pay rises because you're increasing inflation, because that's just utter rubbish. Inflation is being increased from a supply perspective. It's not because you're asking for a pay rise. So, and pay is even stagnating. So it's just nonsense. Let's go and look at his pay. Does he ask for a pay rise? Look how much he's getting paid. Let's see when he asks for a pay rise. So yeah, so I mean, banks are being summoned. What are the banks going to do? I mean, there's a lot of political. It's a bit political right now. Should the government intervene? I mean, me personally, I don't think they should. I think when they intervene in all these other things, it doesn't go well. Like, one of the reasons we've got high inflation is because of COVID. Because this government went to go and spend all that money on all these loans, help to buy, help to eat out, and um, furlough, and yes, it was good, but remember that those schemes were just abused heavily. You got companies that should have realistically just let people go, or, and it's harsh for me to say that, but that a lot of these companies didn't even need that furlough money. They were just taking it, hoarding it, and the government was just spending, spending, spending. How much? I think what was the fraud rate round with all those COVID loans and business loans? That was part of. This is why inflation is so high in the UK. Like, they won't tell you, and they won't talk about it, but that's just the fact of the matter. And you know, if the government now wants to go and intervene to help people with mortgages and start paying people's mortgages, how is inflation ever going to get down? So I don't think that's the right thing to do. Labour are just telling the government, but they're not really offering any solutions. They're probably, they'll win the next election by default, but not because they've actually got any good policies. But I think one thing the government can do is they need to talk to these banks. These banks are hoarding money, getting so much money. They need to talk to these banks. They need to tell them, like, listen, you know, move people onto interest only rates easier. Now, yes, you're going to be paying less and you won't be paying off the principal, but it'll keep you going in the short term, maybe, or extend your mortgage loan again. Like, mortgage is like a lifetime thing now. From 25 to 30 years is going to be the average, but again, your payments will go down. And if you can just manage in the short term while you're rebuilding your capital, and then know that, okay, I'm not going to now use that money that I'm saving now and start spending again, because that would just be the worst thing to do. I'm going to use that money to save, and then just withheld the storm for the next 2 to 3 years, you know, and banks need to be helping people do that. Banks need to be, if you're coming off a fixed rate and you're looking, for your next deal, they put you on a variable rate of 10%. That's just not sustainable. Banks can't be doing that. They should put you on a rate and say, listen, we're going to put you on a rate 6, 5, 6, 7%. Yep, that's more than a fixed rate, and it's going to be there for 3 months, and you've got 3 months to find yourself a fixed rate. If you don't want to do it after that, cool, we'll put you on the 10%. Not just put someone on a 10% straight away. So yeah, that's what the government can be doing and should be doing. They need to talk to these banks. These banks, really and truly, they should just be national banks. They shouldn't even be making profit. You've got savings rates at like 1%, but the mortgage rate is 5%. How does that even make sense? So you're not even getting any money. So yeah, me personally, that's what the government should be doing. But like I said, I feel that interest rates are going to keep increasing. We're nowhere near getting inflation down, and you're not going to really feel the full effects for another 18 months. We've been about 1 year into the rate cycle. So probably in about, a year's time, next year, we're going to start seeing the real effects of these inflation increases. And that's when, we'll be in a position to know, okay, let's start lowering them, or no, let's keep them, or God, well, we might even go even higher. That's just going to be disastrous. So yeah, be sensible out there with the debt you're taking on. Right, let's get into some other news. Crypto, I like crypto. I'm still stacking every month. From the start of this video, I've been telling you, every month I take my salary and I put it into crypto. There's been a lot about Bitcoin recently that I've missed. Obviously, one of the things is, the regulators in America, they're just literally coming for crypto's neck. Uh, they're coming for the exchanges, Coinbase and Binance. But one of the cryptos they're not coming for is Bitcoin. Bitcoin is the one they say is not a security. And to be honest, they might actually have a point. Um, that's a different debate. But Bitcoin is the one they're saying, no, this is not a security. Why is it not a security? Because it doesn't really do anything and it's not really owned by one person. And you can kind of see that Bitcoin, I mean, in essence, this week it's had a nice little rally. And like I said, I'm just investing. And one thing about Bitcoin is it was very volatile, and it's quite coincidence that it hasn't really been that volatile. I mean, for the last few months, it's been between 25 and 30. It hasn't broken out on the upside. It hasn't gone down to the 5,000 that everybody was talking about. It's kind of just stayed volatile. And I'm a good believer in regulation. I think regulation is good in this space. I liken it to, I watched the Spotify movie on Netflix, and Spotify was like, came in and they wanted to basically make streaming legal, like, and um, take away all these Napster and all these companies, and they were all for the people and everything like that. And in the end, what happened with Spotify? They got held behind the bureaucracy, and they had to team up with all these big record labels, and they're just paying the artists pennies, which is kind of not what they were set out to do at the start, but it was kind of the only way for them to kind of, push Spotify through. And the only people that benefited at the end of the day were the record companies who, they got rid of the illegal streamings like the Napsters, and then they made it legal in a new way. And obviously we know how big streaming is now with Netflix, and who really buys albums like that nowadays. So I feel like this is what's going to happen to crypto. I feel like the regulators are going to regulate it heavy, and crypto was meant to be for the people, by the people, but realistically, it's just going to be kind of swallowed up by big institutions. But that doesn't mean that it's not going to be beneficial for you to make money. And realistically, with what we've seen with all these do kwons and all these wild wild west people taking people's money, and you know like I said, I would never advocate, crypto was offering big returns. Me personally, I wasn't really, um, I didn't have a channel them times, but I would never say, the regulations, 85,000, you're protected in the UK for anything that's registered. If you've got millions of pounds and you see a scheme and it says, oh, I'm willing to give you 10% back on your money, and it's not regulated with the FCA, and you're happy to be like, well, if I lose 100 grand, I've still got like 10 million in the bank, then cool, like that's your business. But if you're like just an everyday person that doesn't have that kind of money to lose, don't ever invest in anything that is not FCA regulated. Because if you put your money into an interest product and you lose and it's not FCA regulated, all these court cases that's going on with crypto, you're going to get pennies back on the pounds. So that 80,000 you invested, you probably get about 5 grand back. Whereas if you invest it with something that's FCA regulated and it goes down, especially the way it's gone down, like it's fraud or something, you're going to get back to up to 85,000 per institution. So you could have 85,000 in one institution, 85,000 in another institution. If anything happens, you'll get that money back. The only way you wouldn't get that money back is if, say, for example, you were invested in HSBC, and then HSBC, they have a lot of subsidiaries, and then you was invested in a HSBC subsidiary that you didn't really know was a HSBC subsidiary, and that went bankrupt and HSB went bankrupt, then they would only cover you for the 85,000 because technically it's one entity. I mean, things like that, it's hard to know. Always do your homework to make sure if you are investing in some of these smaller companies, they're not owned by a bigger company. But what's really the likelihood of HSBC going bankrupt? These banks get bailed out every 10 seconds. So just be careful. And that's one thing about Bitcoin. But yeah, back to Bitcoin, it's just really getting that. What we've seen is, this week anyway, the some of the big companies like BlackRock, and this is what I'm trying to tell you. This is what I'm trying to tell you for why I liken it to Spotify. Some of the big companies like BlackRock, um, some of the big companies like BlackRock, I can't want to take this off the screen. Some of the big companies like BlackRock, they're basically now got pushing back for this crypto ETF, this Bitcoin ETF, to kind of make a place where institutional investors, because that's where the crypto is really going to grow next when the big companies start coming in, and they're only going to come in when there's regulation. So that's why they're doing all this regulation stuff, and they're trying to like get this ETF off the ground again. And that's why I liken it to the Spotify case where Bitcoin and crypto was for the people, by the people, and there's a lot of people that got in early that have made a lot of money. But probably going forward now, it's probably the institutions that's now going to drive it. And I still see crypto hitting 100K one day, but I mean, it's at 30K now. So what you're looking at, 3 times X profit, which is good. Obviously, the people that got in when Bitcoin was at $10, they're laughing now. But I do see it going that way, but definitely still a lot of space. And yeah, be wary of the other cryptos. One company I would say, well, this company here, be careful. Um, CSOK. If you're somebody that wants to, you're scared about the buying Bitcoin on the exchanges, you don't really know how to, um, take your crypto offline. You could buy a mining company. A mining company, in a sense, is a company that basically just mines Bitcoin, and as long as Bitcoin is over a certain level, they'll make money. I think as long as Bitcoin is about over 15K, this company is making money. Realistically, look, if you look at the last 7 days, it's gone up 20%. You know, this kind of company is just going to move with Bitcoin. So if you're somebody just like, okay, I want to just invest in a company and I just want to, you can get this in your ISA, Cleanspark. You can buy this for your ISA. You can buy this on any share dealing account. So if something was to happen to the platform, obviously, like if you was to buy it through, say, a Hargreaves Lansdown and the platform went bankrupt, you would, you'd still have your holdings in Cleanspark, so that would save you. Whereas if you buy Bitcoin through Coinbase and Coinbase goes bankrupt, which is what happened to all these other exchanges, they technically own your crypto, and you won't get it back. So that's like the problem. Obviously, like I said, the best solution is to move that Bitcoin to cold storage and you own it yourself. But it's not always easy to do that. But if you want to buy a company instead, and listen, if Bitcoin goes up, CleanSpark is going to go up because they're producing Bitcoin at 10, 15 grand. Bitcoin is at 30 grand. They're selling it. So anytime Bitcoin goes up, this company will go up. So, it's definitely, if you want a proxy for that, it's definitely where to go. So stock related, obviously the biggest buzzword this year is AI. We've had a lot of AI talk, artificial intelligence, probably taking a lot of the resources away from crypto, in a sense that it's the new buzzword, it's the new things people are going into. Definitely got real world applications. I'm sure everybody knows about Chat GPT by now. That's one everybody's using, and there's so many other things out there that I haven't even scratched the surface with. A lot of companies are going to be implementing AI. We're seeing Apple with their reality headset. Everyone is introducing AI to certain aspects. It's definitely something that's going to take off. It's definitely something that even if you don't invest in, and you're not investing in a company that does AI, you could potentially use that for, just the same way YouTube came about. I'm sure there's going to be something that AI could use to make money. So, but if we look at the AI companies, some of the big ones in America, you've got C3 AI produces AI software, you've got Palantir. It's just really a note because these companies, again, it's just a hype. You know, this company was literally trading at $17. It's literally doubled in like what, about a month, less than a month. So, I mean, it did open at about 120 in the peak of like the stock market boom, and then since then it's crashed. If you bought here, like, I mean, you're still in a loss. If you're buying from here, I mean, maybe it'll get back up to here, but at least you're not in a loss. But it's just a case of, don't if you're somebody that believes in this and you've been stacking, and this is why I always say, I've been advocating, and I say, if you believe in something when it was here and you kept on desaying, your average would have been so low by now, to the point you probably averaging at about 15, and you're literally sitting on double your money now. Can it go higher? Yeah. Can it go lower? Who knows? But yeah, I would just say, if you're somebody that's interested in these AI stocks and you've got in late, just do your research because we've had a nice, impressive run. One company I like and I've been DCing in is Darktrace, more of a UK company, more does cybersecurity, but it does have that AI element to it. And like I said again, I didn't buy here. I didn't buy it at the height of it at 9.45. I didn't buy there. You know, I've been this year just slowly getting my average down, and now I'm sitting on a nice profit. And that's really how you do it. If you like these companies and you like them at here, this company opened at 337. It hasn't even got back to its IPO price. So why would you buy it here and the company's here? It doesn't even make sense. And that's the problem with FOMO. Once it's in the news and everybody's all talking about it, that's when we all want to buy it, when it's here. And then you just lose all your money. When nobody's talking about it, when it's down here and you truly believe in the idea, you don't want to buy it. That doesn't make no sense. And I've been saying that when things are on sale, when we have a sale at Pretty Little Thing. I don't shop at Pretty Little Thing, but when there's a sale at Next, everybody be rushing to go to the sale. But when the stock markets are cheap and they're good companies, nobody wants to buy them. That's a bit weird. But when they're expensive and they're all the way up here, everybody wants to buy. So listen, there's a lot of cheap companies out there. There's a lot of good companies. That's if you haven't got the capital and you're obviously bills, cost of living, then that's different. But if you've got money to invest and put things on the side, Bitcoin, look at it. This Bitcoin was at how much? It's cheap now. Cleanspark is cheap. Darktrace, if you believed in these companies, you truly believe in them, and you research them, this is when you want to be stacking. You want to stack now. Build your wealth now. And then you just sit back. And when the bull run starts in 1, 2, 3, 4 years or whatever, you're just laughing. You're laughing, but if you want to go and invest when the bull run starts and all these companies go back up to here, yeah, maybe you'll get a little bit out of it, but more likely you'll be left holding the bag. Anyway, that's the money effect. I'm out. I'm going to try and keep this up more weekly. Yeah, let's get on it. Not financial advice, but just education. I hope you're taking something from this. Money effect. I'm out. Stay safe and stay cost effective. Peace.